Choosing a fixed rate mortgage seems like a safe bet, right? But what if I told you that safety could end up costing you thousands of dollars in the future? My name is Myles of the Noack Mortgage Team, powered by Indy Mortgage. And before we jump into this, do me that huge favor, hit that like and subscribe button if you find content like this interesting. And let's talk about fixed rate mortgages for 2024 and 2025. A lot of would-be purchasers and homeowners assume that fixed rate mortgage is going to be the best option. And honestly, who would? It provides security, predictability, no surprises. But what if I told you that fixed rate product may end up costing you thousands more than you expected and may not be the best option? The problem with fixed rate mortgages is their lack of flexibility. Sure, you can lock that rate in, but it also means you're stuck with it. And that means even if rates begin to drop. And when they do, you could be missing out on thousands of dollars worth of savings on the interest rates. Plus, let's not forget the higher costs that can be associated with fixed rate mortgages if you decide to break your contract term or make changes to your mortgage midterm. It's kind of like booking a flight and prepaying for it and then watching the payments continuously drop until you leave. It's more than a little frustrating. So what's the alternative? Well, that would be an adjustable rate mortgage, or a variable, not to be confused with the static payment variable. We're looking at the ones where the payments go up and down with the prime rate of Canada. And these very well could be something that you might want to consider if you're looking at obtaining a mortgage in 2024 and 2025. Unlike fixed rates, these mortgages fluctuate with the Bank of Canada. So as the Bank of Canada increases rates, the interest rate on your mortgage goes up, your payment could potentially go up, and vice versa. So if they drop rates, all of a sudden your payment's going down, your interest cost is going down. It puts you in a position where your payment isn't stagnant. And with all signs pointing to more rate cuts from the Bank of Canada, as mentioned, now is definitely a time to be considering these mortgage options. It will put you in a position where you're not tied down, and you could potentially take advantage of rate cuts as they come down in the future. So here's some key insights in regards to picking a variable rate mortgage for 2024 and 2025. As fluctuations in the market don't necessarily always mean bad things for you. It can actually mean good things. Now, I know this is weird to say considering we've seen rates go up so substantially, and a lot of people have been feeling a lot of pain with variable rate mortgages. But with all data pointing that rates are going to go down, if you take this variable rate mortgage, it puts you in a position where your payment goes down as well. And it puts a lot of the control in your hands as to what happens with your mortgage. Now, what I mean by this is, as your payment comes down, you could take advantage of your prepayment privileges to keep your payment the same, keep it up higher. And that means you're going to be allocating more money towards the principal of your mortgage, paying your mortgage off faster, decreasing your amortization, saving you interest. There's a lot of benefit to it. And depending on the lender you work with on that fixed rate mortgage, your penalty could be horrible if you try and break your mortgage early to access those lower rates, putting you in a position where you just kind of have to ride it out. Now, yes, there are some risks with the variable rate mortgages. If the Bank of Canada increases the interest rates, your rate goes up. But when we look at it, all data is showing downward rate cuts. There's nothing that we can see that could increase rates, barring some kind of unforeseen natural or major disaster in the world. So once again, putting us in a position where these variable rate mortgages should definitely be something to consider and be a conversation had before signing a mortgage agreement. Another really positive note on these variable rate mortgages is the sheer and utter fact that you can lock in and you have lower penalties. So for example, let's say we take a 5-year variable and we're 2 years into it. So you got 3 years left. You're gonna be able to lock into a 3-year term or longer. So you can lock into that lower 5-year fixed option. And that's where we really want to be strategic on the lender we pick to make sure that those lock-in options are great along with the penalty options. Because with a variable, you're guaranteed that 3-month interest penalty. You just want to make sure it's based on the contract rate, not the prime rate of Canada. So in short, the fixed rates may seem like a safe bet, but they do come with some potential drawbacks, such as higher costs, less flexibility, and missed opportunities. Therefore, in 2024 and 2025, if you're not considering a variable rate mortgage, you really should be. And if you're working with someone that is just strictly pushing a fixed rate product on you, ask them why. And if you need any help navigating these interest rates, let us know. Our team would be more than happy to help you out by arranging a customized, tailored report to your application, outlining 3 to 5 lender options, 5 mortgage options showing you fixed, variable, short-term, long-term, and everything in between. And it would also outline all the key features and details of that mortgage, including any potential hidden fees. Just click that link in the description below. You can schedule a call with myself and we'll take care of the rest. Now, I want to hear from you. Have you gone through a mortgage renewal recently, and did you find the lender was willing to offer you multiple options, or just kind of give you, a 3-year fixed or a 5-year fixed without looking at everything else? Or are you a little bit gun shy based on the recent rate cycle we've had with variable rate mortgages? And if you want more tips and tricks when it comes to mortgages so that you can get the most out of them, make sure to subscribe to the channel. My name's Myles. Thanks for tuning in. We'll catch you next time.